Welcome to another S&P 500 Trade Watch analysis. Today is September 13, 2022. Today, the August CPI number were released, and surprise, 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 the S&P 500 futures and the ETF took an elevator ride down before the market opened. Those market participants that were looking for softer CPI numbers and went long ahead of the report got caught on the wrong side of the trade. And as you have just witnessed, the price action of the SPY right after the CPI release, the SPY dropped 100 plus equivalent S&P 500 cash index point in just 1 minute. Likewise, for the E-mini S&P 500 future, it dropped more than 120 handles before the market opened. So is this the beginning of a move to take out June's low? In this video, we'll analyze what took place today and what to expect in the coming days. Stay tuned. Let's take a look at some market-generated information before we go and take a look at more detail of the S&P 500 ETF, the SPY. As you can see today, the S&P 500 dropped 4.32%, 177 points. And also notice that the VIX is only 27.27. And notice here on June 16, where we have this low here on the June low. And here we see that it dropped a little bit over 3.25%, 123 points. And the VIX is sitting above 30, and it is sitting at 32.95. So you can see the difference between today's drop of over 4% and the June low, in which it dropped 3.25%. On June 16, the put-call ratio was sitting at 1.155. And today it's set at 1.10, so pretty close. It is sitting a little bit slightly lower than the June 16. And also notice on June 13, 3 days prior to the June 16 low, the put-call ratio was up at 1.266. Now here's another important fact to note. This is the up-down volume ratio. Okay, that is the amount of up volume divided by the amount of down volume, and it is, if the down volume is greater than the up volume, we reverse the denominator and the numerator. So if we take a look today, it's minus 18.6. In other words, it's almost 19 to 1 more down volume than up volume. And we dropped 4.32%. Now go back and look at on June 13, 3 days prior to the June's low. Okay, the up-down volume ratio was minus 60.54. So it was a little bit over 60 to 1 in favor of the down volume. And also on June 16, the up-down volume ratio was only 14 to 1 in favor of the down volume. That's why when you look at a lot of people say they're still waiting for capitulation, right? Waiting for the day that we're going to have a down day with humongous down volume or trading volume. With a 60 to 1 down volume over up volume, if you don't call that capitulation, I don't know what you're going to call that. Capitulation always comes prior to the low because people will sell out in despair, and then the last seller will come in at the low. And that's basically what we saw on the 16th of June. 3 days prior to that, we saw the capitulation. People just say, all right, I give up, and they just dump. And then the last people that was holding out finally came in and dumped their share on the 16th. Now, I'm not saying that we cannot see another capitulation by this buildup. Maybe we will, maybe we will not, right? So that is to wait and see. We'll find out when that day comes. But as you can see right now, with today's drop, right, if you just compare the amount of down volume to up volume versus the day back on June 13, is a lot of different, right? You basically have more like a 3 to 1. There was 3 times more down volume than today, okay, in terms of ratio. And also you're looking at the advanced decline. Look at the June 13, the number of decliner over advancer, there was almost 3,000, 2,994 to be exact, right? More declining issue than advancing issue. That's on the 13th of June. And then on the 16th of June, there were 2,686 more declining issue than advancing issue. And what do we see today? Today, we have 2,516 more declining issue than advancing issue. Yes, it's still a big number, but it's not as big as the 16 and also the 13. So today, we got 4.32% drop versus 3.25% drop on the 16. On the 13, it was a bigger drop. So on the 13, we dropped 150 points on the previous day close, and that is equivalent to 3.86%. So today we dropped 4.32%, 177 points. So still, these internal, although they are negative, but it's not as bad as prior to the June low, okay, or up to the June low. So again, put things in perspective. The internal are negative, but they are not as negative as to the June or prior days leading up to the June low. So now let's go and take a look at the price of the SPY and see exactly what took place. Now let's go back to Sunday and Monday morning trading session. That's the Globex and the Asia session. You see that on Sunday it came up, and I have marked off the overnight high and also the overnight low. Okay, because what I want to show you what happened is that when we come in on Monday, all right, when we come in on Monday and we start trading here, this is Monday's price action. Notice in the this is a 15-minute candlestick chart here. The first 15 minutes, put in a low here, and that low is 408.46. Then it run up, and then it came back down, got a pullback, and here it came down to 1 penny above the low of the day, the first 15-minute low, and it came down to 408.47. So that is one thing to observe, saying, you're kind of wondering, why did they stop there? Okay, and only by 1 penny. Right, so obviously we have certain player is watching these level and reacting to these level. Okay, so now next thing is look at this overnight high. Came back up and pushes back up above the overnight high, and since then it came back and test that overnight high multiple times, at least 3 times. Right, this 3 times here, it came down and they push it back up in no time, because that's how you see these long wick, these candle wick. That's when price come down, they just the buyers just come in and buy it back up, really fast. They wouldn't even allow much time spending here. So they basically cut off the sellers. They just buy it back up and take out the offers. So that's, and then when they came up and until the last into the close, the last hour or so, last half an hour, that's when they run it up and do the OpX thing, because yesterday, Monday, is OpX. Those are a little subtle clue of someone is holding up the price yesterday, and they would not let it go. And they're not trending, because you can see that it just chopped around this rewrap. That's why on a range day like this, don't try to go and trade off the rewrap. You're going to get chopped up. Now, you might want to ask, why am I telling you this on Monday stuff? The reason I'm telling you this is because CPI number is coming out. They are basically set up to trap some of the longs, right? Because they would not let the long know what they are doing. So they basically just kind of sucker them in and hold them in. And even in the Globex hour, you notice that right before the CPI drop here, you notice that it is coming up. And here you got some buying here right after the European market open. You see a little buying here on the SPY. You see more of a buying. We take a look at the E-mini SP500. You see more volume here. So they basically suck in more longs here, and they basically setting up a lot of people is going long, betting on a better than expected or a little bit softer CPI number, and still thinking the Fed will pivot. I mean, that's the ironic thing about these people. They just don't listen, right? Powell has said it 2 times in Jackson Hole and in the Cato Institute forum. They say the Fed are committed to bring inflation down, and come hell or high water, they're going to raise the rate. They are not going to pivot, and they're going to hold the rate for longer once they get to that neutral point that they want to get. And that would be somewhere around 3.25% and 4%. And they're going to hold that throughout 2013 and longer because they do not want inflation to come back prematurely. So those people that is betting on that pivot really got hammered today. And these guys that went long, basically have to go and dump and close the position. And look at that, hardly any volume here. So there's no bid when they try to sell. And that's how we get this flush over 100 points in 1 minute. And now let's go and take a look at, see how that looked on the E-mini S&P 500 future. So you see here on the E-mini S&P 500 future, the ES, you see these guys, it's just building the long position here. They're building here, and then here, soon after the European market opened, and also the pre-market in US, and they just built it, and as soon as the CPI came out, they poke it up, and then they flush it. Okay, so then now let's go and take a look at what transpired throughout the session today. Now let's start with this S&P 500 ETF, the SPY, on the daily chart, and just kind of remind yourself here. On the weekend video, we're saying that one of the scenario was that if it come down and dip below this low volume zone, we expect the price to come down and tag this lower range of the weekly expected move and test this trend line here. Right, remember, we also have this high volume node here. And we're saying that if it get rejected on this high volume node, then we basically are looking for it to come back and look for the next high volume node. Let's go and dive in on what have transpired, and then we come back here and look at a couple of the scenario for the coming days. So let's go back and take a look at the 3-minute chart. Now, looking at this 3-minute chart here, the first thing to observe is that when it came down, it stayed below this daily rewrap. Right? And here it got a little bit long, a little bit short here. So you probably got those lake short coming in, basically those people that short, what we call short in a hole. Then it kind of got a little bit of squeeze here and come up to the rewrap and found the rejection of the rewrap. So if you are going to trade off the rewrap, this is one instance is that you could take a short here and basically put the stop somewhere above the rewrap. And here's the maybe this would be the location above this high volume node here would be the stop loss of this short trade. If you take a short here and then short it back down, and you can see hardly any volume here, and it just liquidate down to here at this point, and kind of got a little bit of a pause before it took it down into the close. Now notice into the close here, got this little tweezer bottom, and then it pushes back up. Okay, remember the zone that we talked about, right? This is a high volume node, okay, and this is the lower range of the weekly expected move. And we also have a trend line that come up, and this providing a little bit of a support. So let's go back to the daily chart and take a look at that. So here's the daily chart. You see the confluence here? Here's the trend line support. And this is the high volume node. And this is the lower range of the weekly expected move. So that's the reason why I also put out a tweet on my Twitter channel, say, when fishing, I say fishing. So in other words, I did come in with a little bit of a long position here into the close. Basically, hey, I look at this, I got 3 level of confluence, and I'm basically expecting it, if it plays out, we get a bounce. And if we get a bounce because it got rejected at a high volume node, and I'm saying that then it will come up and try to look for the next high volume node, then it would be up here somewhere between 411 and 416, and possibly it could even go up to this 417, this upper range of the weekly expected move. Is it possible? Sure, it's possible. Is it probable? I don't know. But this week is a quant witching OPEX. So you got option futures, option on future, and everything is expiring this Friday. So you can have all kind of stuff going on. But in regardless, the first thing is we also have this low volume zone. So if it's going to come up, we got this low volume zone as the first target, and then the ultimate target would be this high volume no. So that's the reason why I said, hey, if I take a trade up here and if it reverse back down and take out this high volume no, I take my losses and move on and reverse the trade, because then I know the probability is that it's going to come down to this low volume zone. So basically, I'm risking a little, try to get a little bit of a high, bigger reward here, right? So it's worth the trade to take a low position here and trade this up. And what's come worse is it come down, then we catch a trade playing down at this 386, 387 level. Okay, so that's basically what happened today and what I'm looking for in the coming days. And who knows, maybe we get that tomorrow. Anything is possible. So thank you for watching, and be sure to smash that thumbs up, help me promote this video, and stay safe.